Hello all. Market updates April 2020 at the time of Corona. Now, we all know what happened in the last 1.5 months. Before March, we have not predicted that this Corona impact is going to impact it the way world it is today, both in a real economy as well as the financial economy. Everything is visible in front of all of us right now. I'm going to share with you few data points of what exactly has happened in the economic side across the globe, and as an investor what need to be done right now and going ahead where we see the market will be headed to. The situation what we are facing right now, if we can say that we S&P index has never seen this kind of huge market fall before October 1929. Even Dow Jones has never seen this kind of slash before last at 1932. We have a biggest single day oil price fall ever. Volatility that we are seeing right now is way beyond 2008 level. Even the SARS, Ebola, or the 1920 Spanish flu, the effect of the economy this time will be going to be much bigger. Investor panic is obvious, which is quite relevant, which can be seen in a huge inflow in US Treasury bills. So, in fact, US Treasury bill has the highest ever inflow in recent times. We have seen the FIIs at withdrawal $4.5 billion from the Indian market, where Indian government has taken a few bold steps in the stage two. We have a lockdown, we have a strict government measures, special disaster act was passed, and so on and so forth. So if we can able to contain this coronavirus spread in the stage 3 where we are right now, I think situations will be better. From the economic point of view, I can say that we have three shock that the economy has faced right now. One is a supply shock, one is a demand shock, and another is a oil shock. Now, in the supply shock, we have seen the manufacturers are not getting the products to supply side, so they're impacted on that. The demand shock is quite obvious because the consumers are not going to buy from here. Probably next 6 months, you will not see any consumer demand coming up. Oil shock, we have already seen the price at a record level right now. So because of this thing, we find that the next quarter or two is going to be impacted heavily, and because of these three things, we will see the business is not going to pick up in the next couple of quarters. So what is going to happen is that the government is going to impact it in its tax revenue. Now, one of the biggest revenue source of government is tax, and I feel that its revenue will be impacted. But thanks to low crude oil price, that will help support the government. Now, every single dollar price reduction in crude saves a huge amount for the government, and that's why I've seen that government has increases the excise duty also. Uh, now, the rural economy, I think, although we will see a huge impact in the urban economy going ahead, the rural economy will be less impacted, right? So if we see the data which is showing point, we see the stock market performances in 2008 and in 2020 right now. Apart from most of the indexes in 2020, we see Shanghai index has not been impacted deeply. Apart from that, most of the indexes has fallen hugely. So, I think the because I am not going to talk about any political scenario of the country specific, but this entire pandemic will result in a huge shift of from I think from the corporate investment in China towards more towards India. There is a positivity or a possibility that India will get more share of FIs when the next time market will move up. Uh, from the GDP point of view, I can say that we already need to downgrade our projection. We see from the data before COVID outbreak, we were having 4.5% growth in India, but 4.5 or 5 and 6% growth in India. But right now, after the COVID impact, I think the GDP will grow at the rate of 1% or 2% level in India, and most of the European countries will have a negative GDP. Okay, if in fact we will see a degrowth in US and other countries in next one to couple of years. In India, we'll see a degrowth in the urban economy, but I presume that the rural economy will be on a positive side and a safeguard for us. The data is matching with what's exactly shown in the World Bank also. Okay. Now, how long will this survive? Another important data point is the FIIs flow. This is the net equity outflow of FIIs in the month of March. The similar amount has been outflowed from the debt side also. So we have seen a huge outflow of the FIIs, and FIIs are mostly sitting on a cash right now. Now, how long will it go? The main question here is how long will it go, and what need to be done right now. Before March, no one has predicted that this will happen. Market is like a pendulum. Now, I feel that those who Nifty at 8,000 level right now, and those who can buy right now in next 2 to 3 years, they will make their money double or triple. So is it a good time to buy in equity right now? Well, I am going to disclose that in next couple of minutes time. While I presume that there will be a paradigm shift in healthcare and technology, the business will transform there. Like after 2001, the security business, the way we do security business changes radically. If you see the valuation point of view, everything is at deep low. It's too much attractive. You have bond yield versus earning yields, market cap to GDP. PE is as 15 right now. This data is as of March is trailing at 15 right now. So every data point is saying that the market is extremely valuation right now, and is a good point to take enter. So should we enter right now in the market, or what should be the approach? As I said, I'm going to tell you. Before that, I want to tell you that what initiative recently RBI has taken, which need to be understand right now. So RBI has normally taken 3 steps. One is a rate movement, one is a liquidity movement, another is a regulatory easing. Now, in the rate movement, what RBI has done is that they have reduced repo rate by 90 basis point. Now, what that means is that now will bank will find it more attractive to lend right now rather than keeping money at their own disposals. So this RBI rate cut in reverse repo will will incentivize bank to lend more. Now, what the problem here is, there is a complete freezing in lending activity. No one wants to lend and no one wants to take loan right now because no business activity is happening. Next one, we have seen a CRR cut by 1%, which will, as well as MSF cut by 1%. So both this thing will infuse 3.7 lakh crore amount of liquidity in the market. Now, all this inclusive of this thing, we have 1.7% of GDP liquidity has been infused in the market. Another important thing happened right now is that we have LTR, that is long-term reverse repo. There we have seen that RBI has given a 1 lakh crore amount of buyback facility. So you will see a big corporates having AAA rating, bank will start buying those bonds. So the chances of default in the corporate bond segments will be lesser. In a regulatory easing, we have seen a 3-month moratorium which is given. So all the small SMEs who will be defaulting in the next couple of months will not be treated as an NPA. So those are happened on the RBI point of view. So clearly RBI has infused huge amount of liquidity in the market and a confident building measures. And we presume that this is going to happen in the days to come more. Now, there has been an indiscriminate selling of FIs and domestic in the market in the last couple of weeks, and people have not sold on fundamentals. They've sold on most of the panic kind of thing. So the one important point is that there has been huge drop in selling activity across the globe. A couple of industry has affected huge badly, which I have shown here. You can see the high exposure sector out here. In Europe, there is a 60% drop in car sales, and in China also the 20% drop in retail sales, despite they have able to curb COVID spread. Equity market is down by 40% near all across the globe. Starbucks coffee sale is down in 90% in March. So why I'm saying this data is that even if you have card sales down 85% in March. So why I'm saying this data is that this business activities is going to suffer from the next 2 quarter as a whole. People will not start buying this thing, and this is surely going to impact the corporate's profitability and the books. So this point of view, now what is implication in the market? Now the implication in the market is that another interesting data point before saying the implication and one need to be done is that last week we have seen the government has reduced the interest rate in fixed deposit, PPF, and term deposit and post office deposits, right? So which is right now hovering around 5.5 to 6%. There is a sharp fall in different rates across in a fixed deposit spectrum in India. So I believe that FD rates will fall further down to 4% because bank will find it not profitable to stay at 5.5 or 6% FD rate right now. So you will see a lot of rate cut going on from here from the RBI point of view, and there will another sharp rate cut happen in FDs and senior citizen scheme and all these schemes from here. That's one thing will happen. Second thing is that I find that right now the most important asset class where people are looking is the government bonds, which is one of the most safest. As I saw it, that US Treasury bill has shown a huge buying thing. So similarly, in India also government bonds will be much more attractive. Low duration bonds, government bonds, PSU bonds, and liquid fund will be much attractive. You will continue to get a rate of 6 to 7% out there. So that's going to happen. Second thing is that I think in 2008, what happened is that we have a financial economy which collapses, and then it impacted the real economy. But what happened here is now we have a real economy which got collapsed. So every economy is shut down right now. So we have a real economic collapse. So this real economic collapse will ultimately impact the financial economy, which is going to impact 4 to 5 or 6 months from now. You have not seen the jobs are being laying off. You have not seen the data of corporates earnings right now. So which is going to happen in next 2 quarters. So financial impact will happen in next 2 to 3 quarters, and then again the financial collapse will impact the real economy. So we are only on the first stage right now. So this 1 year from now, I don't think that you will see a huge impact in the corporate earnings or the growth from here. Having said this thing, I think the fiscal deficit will not be a problem due to the low crude price, and perhaps RBI will give more aggressive stimulus going ahead. So that's going to happen, and going ahead, I think there will be more rate easing, as I said earlier. RBI will be a lender of last resort, and I think they will they will do a lot of things, a lot of measured stimulus package in days to come. Uh, mm, so another important thing which I observe is that there will be a huge NPA. What I presume is that from the banking sector, from the retail banking sector, there is a moratorium of 3 months, which we all know. Now, people after 3 months, a lot of people will not be able to in a position to pay 3 months dues. A lot of small SMEs and small companies will be struggle to pay their loans. So I think the NPA will rise after 2 to 3 months time. So that's going to happen. So as an investor, what need to be done out here? Now, I think that as an investor, there could be a three scenario going ahead. Number one, if we have a corona outbreak right now, the way that we are here, if this thing continues, Nifty at 8,000 level plus minus 1,000 level is what I'm seeing for the next 6 months. And so if this thing continues the way we are right now, we have controlled the pandemic, we have controlled the COVID. So if we are able to control the COVID, we will be remain at 8,000 plus minus point of view for the next 6 months and then move on. Uh, Next probable situations could be Option two will be we got a medicine soon early, probably next week, and so if that happens, then I think we are already bottoms out and market will start turning around from here. Third option could be we go for an epidemic or a pandemic stage. Now, if that happens, then we have a serious problem. We will have much degrowth from here. So this is the three scenario which can happen. So there is a 20-25% chance that we can go to the pandemic, but government of India is in very aggressive in controlling things. So I don't think so that pandemic thing will happen. And I think that there are a lot of companies are in a final trial stage of into medicine. So medicine will be very important factor right now. If we get a medicine by next a week or a next month's time, so then the entire pandemic can be controlled and economic collapse can be controlled. So that's the thing. So and as far the investment goes, I think we should wait for another 10-15 days time, let the market get a direction, let some kind of medicine or control of this COVID-19 comes up. You might be getting a lot of calls from different traders or companies about investing right now. This is the bottom up. I have shown you the data that we are fundamentally valuation wise very attractive to enter, but we never know what is going to happen in days to come. Because when emotions comes into place, panic comes into play, logic do not works out. So I will suggest that wait for another 10-15 days time. It is better to sit on cash rather than go and investing aggressively. uh, Even if you are investing right now, probably even if we find a medicine and we move on from there, I think medicine will be available in next 15, 20 or months time. It is the company which are more resilient that is going to survive from here. Okay, so a small company who are not resilient will be difficult to struggle right now. So when I talk about resilient, you need to look at the company's portfolio from the management, balance sheet, corporate governance, and everything. So big company with a good management, balance sheet, they will survive this kind of thing. So investing in a large cap, investing in a well-regulated company is highly recommended. Don't go with the trading calls right now. Small companies, they will struggle to survive. There, I have shown you the data point of which industries are going to impact it hugely. So those industries should be stay away from. Uh, my suggestions on a summary point of view, like you need to wait for 15-20 days to get enter into the market. Even if you are willing to get enter into the market after 10-15 days time, invest in big stocks, invest in large cap or well governed company are more resilient to this shock. Second will be invest in a staggered way, invest probably in a liquid fund and do a staggered investment through STP regularly in through into equity. And third option will be you can put money in a liquid fund if you're not putting money in a bank savings or current account. So and fourth will be gold. So my suggestion will be gold with a good investment option, liquid fund. Low duration funds or government bonds are attractive right now. Third, for equity investment, wait for another 10-15 days time. Look out for the how the spread of COVID is happening and then take a call. If you are willing to take a call, invest in a large cap companies, well regulated, well balance sheet, well governed, the company business are resilient, invest in those company only. And fifth, invest not directly in a one approach or invest in a staggered way. Suppose you put money in a liquid fund and invest regularly, daily via STP. Rather than investing lump sum at one time, invest in a staggered way in days to come. So thank you all. Thank you for having a patience listening. I hope that I am able to address the market condition right now. I will be coming up with a lot of data point in next couple of days time to show what has exactly happened in the market in equity as well as the debt side. You can drop me any questions if you have in your mind. Those who have already invested, I have said that please do not make convert your notional loss into real loss, as the data suggests that all the previous virus outbreak after that 1 year we have a huge inflow. I personally believe that in a 1 year or 2 year times we will reach a new uh, high just because we have a huge domestic inflow coming up. The FIs are sitting right now on a cash. They will come back largely after once we have a medicine things that comes up, and I think India will be much beneficial. They will invest hugely in India going ahead, and India will be benefited out of these entire things. Hope that we get a medicine soon. Hope that this outbreak controlled. Hope that we have a lockdown sooner or later. It closed down and we will move back to the normal life. I pray for all of your and your family's safety. Stay home. Stay healthy. Thank you.